What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 10th of 2018. Well, folks, I hope you all are having a wonderful start to your Monday. We got a lot of important things to talk about here on the Daily Update. As always, we're going to be spending a decent amount of time taking a look at market valuations, as well as doing some technical analysis on the market leaders. But outside of this as well, we've got some key topics that I really want to spend a decent amount of time talking about. For example, Ethereum, the second largest cryptocurrency, has been on the minds of many people over the past few weeks, and many people are expecting that we're either going to see a major boom in price to the upside or a bust going towards a flash crash over the next few days or weeks. I want to spend some time to really talk about this. There's been lots of articles and kind of buzz going on in the crypto space, and we've seen a massive change in the short and long positions for leveraged exchanges on Ethereum. So I want to spend some time to talk about my perspective and what I see as a trader, and along with that as well, I want to spend some time to talk about volatility in traditional markets, as well as what I'm currently watching in regards to some of the major indexes for the equities market. So we've got lots of things to talk about. Let's not push it off any longer and dive right in to the update. So taking a look at crypto markets first and foremost, we can see that markets are generally in the red here. We can see across the board that most players are obviously following Bitcoin. Bitcoin had the massive dramatic sell-off around $1,100 within a 16-hour period, as we talked about on the channel, and obviously altcoins followed down or remained relatively stagnant with Bitcoin in a comparison. However, we can see here that there are a few players up to the green, but most of them, guys, to be fair, I'm not going to lie to you, a lot of them just seem like propped up speculative plays, market makers toying around with the market, like Bitcoin Diamond and Dogecoin and Redcoin. Some of them don't have much liquidity to them, and really the only thing that I see that brings a little bit of a sense of legitimacy is Dash and players like Zcoin, where it seems like we're really getting some optimism in the peer-to-peer digital currency space. Again, nothing too serious right now. It's hard to find optimism in this market, to be fair, in valuations, but it's good to see that a few players are holding up nicely in this market. For the most part, though, things are in the red. Now, if we go to take a look here at market valuations, we're pretty much back down to where we were back in August. Again, with Bitcoin holding around 6,000 and altcoins, for the most part, actually holding up quite nicely to Bitcoin. We're going to learn that there's really one player that's dragging down these valuations in markets outside of Bitcoin. The question here is whether or not we can hold at these levels. Again, it's a matter of whether or not Bitcoin will hold 6,000, guys. If Bitcoin collapses below 6,000, you could easily, very well see valuations in total go down to lower levels. But at the moment, we haven't seen that yet, so we have to wait patiently. In fact, we've been actually holding higher levels on the lows since one of the bottoms we had back about 2 months ago, back in July. And we'll take a look at that on the TA side of things in just a bit. We can see other coins or altcoins generally holding back down towards their lows again. Ethereum being the biggest depleter of this. So as Bitcoin dominance rises here, as we start to go past the upper 50% range and go towards 60%, many people are curious what other coins are doing. And really, we haven't seen much of a depletion and other coins here. In fact, they're actually holding quite nicely in this supposed bear market here. So what's really depleting this? Well, we can see that as other coins have generally held across the same level here, around 19%, we can see that Ethereum's market dominance has dropped from 16 to 10%. So big deduction in valuation for Ethereum here. And a lot of people have gotten very nervous. Large investors in Ethereum are curious as to what's to expect over the next few weeks. There isn't much optimism coming in general to investing in cryptocurrencies, guys. Just to be fair, as much as prices are low, we tend to get the optimism off of catalysts, off of markets starting to trend upwards. So we haven't gotten that yet. And with that, there's a lot of people who have massive stakes in Ethereum, and they're curious about where the price could go. So we'll spend some time talking about that. The big thing here I want to focus in on is the massive amount of bets against Ethereum. Now, we've been talking, I even just did my last video on leveraged exchanges, people trading on margin, and trading at ridiculous levels of margin as well that are not safe to usually invest in. Things like double-digit 10 times leverage, 20 times leverage, 50 times leverage, 100 times leverage. You see this kind of craze in the market. People are getting extremely negative or extremely risky to try to make up for losses in crypto markets. And I really don't feel that that's the best thing to do. But again, human nature will prevail. People will make decisions whether or not, you can tell someone to not make a mistake a million times and they'll still do it. And again, sometimes there are great opportunities in these markets. Putting all that aside, though, we can see that Ethereum right now has a very steady set of people betting against it. And we go through the article, they have some diagrams here showing these shorts and longs on price. And as the price has been depleting, we've been seeing shorts build up and up. And this is very tended in most markets. People get more and more bearish as time goes by, even though the majority of the winning positions will have done it earlier on. You know, again, when the trend gets too popular, you tend to get a short squeeze, you tend to get a trend reversal. That's usually how the picture goes. But Ethereum might have a ways to go here. So I want to go ahead, spend some time here to talk about what my mind is on Ethereum now. And then we'll go back to looking at Bitcoin and a few key players and what I'm really optimistic on in the market at the moment. Here's the thing about Ethereum. We talked about this. Ethereum was in a very long-term technical wedge here, and sadly, it broke out of that wedge. This was pretty clear to see that if Ethereum broke through this, we were expecting some serious sell-side action. We talked about this on the daily updates, as many of you might remember if you keep up to date with them. And I was very concerned that Ethereum would possibly be going on a massive sell-off towards the lows down here, around 2,500,000 Satoshis. And again, we haven't seen this level since all the way back here in December. It was probably necessary for Ethereum to do this because most altcoins have done this. Most altcoins have come down towards their 2017 levels, back towards where they were back all the way in the summer of last year, and sometimes again just coming back down to these lows right before the run-up going into 2018. So I think it's very understandable that Ethereum's doing this. There's not much momentum. There's some fundamental optimistic things coming for Ethereum, such as Casper and a lot of other upgrades. But to be fair, this stuff is way down the pipeline. It's not something we can expect next week and isn't going to get investors all excited. Even if it comes through, optimism needs to come into general crypto markets before you can see a massive player like Ethereum rally up to these highs again, okay? So we have to be patient. Now, the other thing I'd say that would probably get people excited is Ethereum futures contracts. But again, I think most people, like the CBOE, are waiting for an official definitive comment from the SEC on Ethereum not being a security. Now, there's been some pretty clear statements that the SEC is leaning that way, but I think it's going to take time to get these futures contracts going through. And again, some more clarification from the SEC and financial regulators. Outside of that, though, this is what I'm watching for here, guys. I'll be completely fair with you. I think you're going to probably see a rebound on Ethereum here. As much as I'm not really focusing in on the protocols, Ethereum is getting to a point where it's almost oversold. I think it's got a little bit of a ways to go. I think you'll see it come down probably towards 2,500,000 Satoshis, or at least test near the support range that we haven't seen since back here in December. Now, here's the thing I want to also point out as well. If you are going to go out there, guys, and you're going to short Ethereum to that level or try to play a long play on Ethereum, again, I can't tell you guys whether or not you're going to, if you're going to want to trade on margin, you're going to want to trade on margin. The thing I would do if I'm going to trade either way here, if I'm going to play that short trade towards that support level, or if I'm trying to go long here and I think there's going to be a rebound, a few things to keep in mind. Do not trade with ridiculous levels of margin, guys. That's the best, kind of piece of advice I can give you. Again, it's not financial advice. You do what you want, guys. But if you want to know how I would trade this, do not take excessive risk in this market. I would say especially to the downside, because you could get liquidated in a second if a whale comes in and buys stuff. Or if you're building a long position, could easily get triggered out if someone dumps Ethereum down to those levels, if they keep selling Ethereum down to those lows. So again, just use margin properly. Use it in a very conservative way to potentially increase your returns or to hedge your risk. That's the best way to do it. So again, as we see Ethereum deplete down here, my recommendation to those also playing the bounce play here as well is to not wait exactly for that big even, to not wait exactly for the low that we saw back here. The low here that we have registered is around 2,400,000 Satoshis, or really to be specific, 2,390,000 Satoshis. But to be fair, don't wait for those big evens. Get a little bit more, get a little less greedy, pay a little bit of a premium if you're going to really try to play those trades, because you might not get your order filled. That's at least what I would do, personally speaking. So again, decide for yourself, guys. That's really generally my perspective on it. I think Ethereum futures contracts could provide some optimism, especially if we get that mid-tier bull run that we've been talking about, where we could see Bitcoin come up to 10K. This has been something, again, that we expect could potentially happen. if we break outside of this descending triangle right here. So if we can get a breakout here above the 200-day, I think what could be a big carrier for altcoin markets is Ethereum, and that's going to be the Ethereum futures contracts. Not really anything fundamental, to be fair. I think it's just going to be pure speculation, and that's why I don't think it's going to carry markets that much. That's why I think we could get at least a short-term rally. We're going to need something much bigger to carry markets in the long term. And I think you already know what that idea is in my mind. I've actually kind of switched it from being the ETF craze. I think that would be good for crypto in the sense of its price, but outside of it, the ETF, I really think it's going to be the rally in peer-to-peer digital currencies. I think we're going to be seeing a big shift in trend, guys. As much as Ethereum, I'm not exactly bearish at these levels. I'm more kind of optimistic as we start to get towards these lows. I don't think the protocols and the enterprise blockchain adoption is really what we want to look forward to. There's a market for it. There's an absolute market for it, guys. But what I'm optimistic about is the sector or the technology that needs to see decentralization, that needs to see trustlessness, and that is money. And I can see across the board here, the only altcoins that are really proving any kind of strength in this market is really peer-to-peer digital currencies. Take a look at Dash here. Dash has, for example, had a massive rally, almost got up 50% from its lows here. And this is something to marvel in this kind of market where most of the gains have fluttered back down to where they were back during the later part of August here. So it's really nice to see Dash holding well. I haven't made any trade on it just yet. I'm looking to buy some as they come down to their support levels. But again, take a look at Monero as well. Monero's been holding very, very nice. And again, is playing in with the long-term pattern here that we talk about comparative to Bitcoin. So I'm waiting for these to come down to their moving averages. I'll definitely look at building some positions in these. But again, the peer-to-peer digital currencies are what I'm looking at. Now, I will tell you, there is one that I built a position in. I got back into NANO here. NANO again had a nice depletion. Again, I closed most of my positions in the mid 4,000 Satoshi range. Now that it's come down towards around 3,000, I'm looking to see this get support really above the area where it started to break out or hold on the 50-day. Again, I have a relatively tight stop on this if it starts to decide that it's going down towards these lows down here. But at the moment, I think it looks quite nice. Take a look at the hourly. We're holding at this level quite well. So if it continues to hold here, again, this could have a nice rally if it goes towards these hourly moving averages. But again, I'm just big fundamentally on the peer-to-peer digital currencies, the plays that are actually helping a real issue, and that's what's going on in the emerging markets. And I think it's going to spark a lot of demand. People don't see the volume increases we're getting and the rapid rate of adoption that these markets are bringing into cryptocurrencies. So again, that's my play here. Sorry to kind of ramble on here about a few different things, guys, but on Ethereum, it's very likely that we could see this go down a little bit more, that this could collapse down towards its lows or relative lows and come back down towards around $150. I think that's generally going to be my target price range for Ethereum. So until then, expect it to drop a little bit more, but it might not hit those precise evens that we're looking at. Again, if you're thinking that way, you got to think a step ahead of the other traders here. Be a little less greedy. Play the trade before. If you're really going to try to play the reversal, you need to be a step ahead of the competition in that case. So that's my big point in regards to Ethereum. Again, fundamentally, Ethereum is still one of the strongest players in the protocol space, but I don't think protocols are going to be the play for 2019 and onward. I think it's going to be peer-to-peer digital currencies. So that's my general feel here. All right, so next time I want to spend a little bit of time to talk about the VIX or the CBOE volatility index. For those of you who don't know, the VIX is an indicator of volatility in the S&P 500, and we can spend some time to really analyze it towards spotting potential moves in price. Now, the VIX is generally inverse to equities. If the VIX is spiking up, this means that stocks are depleting in valuation. We're seeing probably a massive sell-off in equities or price drop in equities. And because of that, it's a really key indicator to watch for spotting potential upticks in regards to market volatility. And along with that, spotting the current assessment of market market sentiment on equities and the stability of valuating equities. So I want to go ahead and spend some time to talk about analyzing the VIX a little bit here. We had the rally back here in January and February of 2018 when we had a massive sell-off in equities. Again, this came after a quite nice run-up going into the early part of 2018 and the previous past few months of 2017, and finally brought some instability in a market with record low volatility. The reason I want to emphasize the record low volatility of 2017, which was a multi-decade low in volatility, meaning that prices were stably moving up. There wasn't any major gaps in price. It was a nice steady uptrend, and markets were extremely confident. The reason why I want to point this out here and indicated by the green line is because we are building a new base on the volatility index. Whereas we were having record low volatility in 2017, back around the 9.5 range here on the VIX. We're now building a new range around 12. As you can start to see, the base generally was holding along this big even here. We're starting to curve up here. If you take a look at the weekly, it's looking like we're starting to form a curvature in the VIX that might indicate a sentiment towards uncertainty in the market, a sense of uncertainty in market sentiment at the moment. And again, we might be overdue for it. We haven't seen any crazy moves in the VIX since back here in February. So whether or not we get the same repeat of what we saw back in 2018, something slightly less or something even worse, it looks like there could be a potential trade for the VIX, or at least a depletion in equity valuations. Now, talking about this here, the big thing to take away from here, whether or not anything happens, is that the market is seeing a bigger potential for uncertainty in valuations, meaning that we could see some serious gap downs in price. We could see increased volatility, increased uncertainty. If we take a look at the Nasdaq, for example, we finally got a decent week of sell-off last week after a record run-up in equities in the tech sector. We've been seeing Apple hitting $1 trillion, Amazon hitting $1 trillion, and finally we started to see a little bit of a depletion in valuation. Could it be that the buybacks are wearing out? Could it be that equities are finally set for a depletion of value? We'll have to see. Again, I'm not going to be going extremely bearish. Again, I think this year we could very well see another kind of flash sale like we saw back in the early part of 2018, and maybe even something worse. But we're going to need a few things. We're going to need to see a breach of the 50-day, the 100-day, the 200-day, and a breach of this line of support that the Nasdaq has been holding since back here in 2017. You get that, and you're setting up very well for a dramatic domino effect sell-off in U.S. equities. And you can start to see an example of this here, but I think you're going to see it even more dramatically if you get a break on this line. Luckily, it was able to hold here, but if the Nasdaq can't hold on that line of support, it is going to be very ugly, and that is going to be a crazy VIX trade, meaning that it would be awesome to trade on volatility. And there's some instruments you can use for that, guys. You can look into it. There's things like, I think it's like VXX, there's UVXY. Be very careful with the leveraged volatility trading products out there. But again, whether you're going short on the market, whether you're trading on volatility, whatever it is, I think we're very well expected to get some here at these markets as we've tested new highs and as we're testing towards the 50-day. If we break that 50-day, it's very, very likely we're going to have a retracement down here. As we've seen in the past, when we break the 50-day, we tend to touch the 100-day and get very close, if not make contact with the 200-day, and maybe even potentially worse. So again, we can see this across the indexes here. We can see it in the S&P 500. S&P made new highs from back in 2018 and is definitely looking like it needs to at least retrace down to the 50-day here at these levels. Markets are signaling a little bit less confidence. The thing I want to talk about, though, that actually could show some serious weakness here is the Dow Jones. Now, why do I have, I'll take it here to the full screen so you can really see it. Why do I have this line here on the Dow Jones here? This is the price range we saw in regards to back here in February of 2018, where we saw the depletion. And what I want to signal out here is that there's been a very big issue in equities markets, and that's the fact that the Qs, the Nasdaq, have been seeing the majority of the gains in valuation. We've been seeing, again, Amazon and Apple, the big tech companies, taking in all of the valuation. A lot of that has not come back into the Dow Jones. And if the Dow Jones cannot hold above these moving averages, and in fact tests below them, we could very well see a massive depletion below these levels. This is the price range, again, that we saw back in February. If we were to see a repeat on this, if we were to see another flash sale in the market, the Dow Jones will be well away from the moving averages and could be one of the leading indexes that actually starts to drag down other equities. Again, if you see any of the major three indexes start to come down like this, it could signal some serious worries for markets. And it shows that, again, we've got massive centralization of the tech sector here. Maybe some over-the-top valuations that, again, have gotten out of control, that have been propped up by stock buybacks, and that might need to see a depletion in valuation. And again, that's what leads to volatility. So again, my play here is watching the VIX. I'm going to be possibly doing some volatility trades if we break below the 50-day on the Nasdaq or the S&P 500 or here on the Dow Jones. But I'm going to be waiting patiently. We'll have to see what happens here. I think, however, you're in favor of potentially seeing a pretty big swing in volatility. Whether or not it's going to be a recession type event, I don't know about that. We'll have to see. I think that's going to be a breach more on the 200-day. Anyways, everyone, that's it for the video. Thank you all so much for watching. I hope you all are having a wonderful day. If you guys have any comments, questions, or concerns, leave them down in the comments down below, and I'll try to get to them. And also, get a discussion going with the community. What do you all think about all these different topics? Let me know in the comments down below. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.